Slack has been a pretty lackluster stock considering that it's in one of the hottest sectors, the software as a service sector, also abbreviated as SaaS. SaaS encompasses all the companies that provide their software services using the cloud. An easy way to think of this sector is to think back to the early 2000s when you had to have a physical CD to install software onto your computer to use. But now, you can simply download these software services with just an internet connection. Actually, Slack has been underperforming until its shares jumped up 37% over the past week when it was reported that Salesforce is in talks of acquiring Slack. And thankfully, I was able to pick up shares before its share price skyrocketed, and I'm going to discuss why I thought Slack was undervalued when I bought it, and if you should buy Slack now. Slack's business model is to provide a messaging service to its users in the workplace, and the company has been consistently growing its user base since its IPO. But its stock has been underperforming, and the main factor that led to that is that there is one big competitor that stands in its way. And that competitor is Microsoft Teams. And before you say that Slack has no chance against a gargantuan company like Microsoft, and click away from the video, I want to say that Slack still has a lot of potential for growth, even with Microsoft Teams existing as a widely used messaging platform in the workplace. And I will discuss that in more detail later in the video, but first let's talk about Microsoft Teams a little bit. Actually, Microsoft Teams almost never existed because Microsoft was thinking about acquiring Slack for $8 billion back in 2016, which would have been a great deal for Microsoft since Slack's market cap is sitting at about $22 billion today. But instead of acquiring Slack, Microsoft decided to launch its own workplace messaging service. And since its launch, it's seen an explosive growth in the number of users. Just last month, Microsoft announced that it has reached over 115 million daily active users, which is really an explosive growth rate when compared to the 13 million users they reported back in July of 2019. But one thing to note here is that the 115 million daily active users in October did not have to pay for Teams if they already had Microsoft 365. Microsoft Teams' growth is a function of getting its current customers to use its other product, and so it is a lot easier for Microsoft to get users to use Teams because so many people are already using the other Microsoft Office products. And Teams is as much a Zoom competitor as it is a competitor of Slack, which is something that investors seem to be forgetting since Zoom shares have been skyrocketing, unlike Slack. And Microsoft Teams has been out for 2.5 years, but Slack has been able to steadily grow its revenues at a good pace, with revenues rising and costs falling even though its growth has slowed compared to last year. And a good metric to check for a company like Slack to see if the company's services are something that is working for its customers is to check the net dollar retention rate. Net dollar retention rate measures how much more or less existing customers bring in for the company. So if existing customers like Slack's service and decide to upgrade their existing plan or bring in more employees to use Slack, this number will be higher than 100%. And the lowest net dollar retention rate was seen in Q2 of 2020, but this number was still very impressive at 125%. So this tells us that Slack users are finding Slack useful and are willing to spend more to get access to more features. Another positive factor to consider about this company is that Slack aims to grow with its users. Slack definitely has big name customers like Amazon, which announced in June of this year that it will provide Slack licenses to employees that want to use it. And these big companies make up about 49% of Slack's revenues. But Slack also is targeting younger, more early stage businesses and even schools like MIT and Stanford to expose its service to the younger generation, who will bring experiences of using Slack to their workplace. And so even though Slack is seeing a more gradually slowing growth, the fact that it is exposing its services to younger students and early stage startups will allow Slack to grow with these smaller businesses. So, the final question that needs to be answered is, should you still buy even though the share prices are up over 30% since last week? I think as always, the answer will depend on your risk tolerance and whether you were able to buy in before the news of the potential acquisition got out. And everything I say is my personal opinion, and it may not be the most profitable way to deal with this investment. But I think that if you were able to buy shares of Slack before the news, then I think it is wise to hang on to the shares even if the acquisition deal doesn't go through, because personally I believe the stock has more potential to grow, and obviously Salesforce thinks so too. But be prepared to see the stock crash if the deal ends up not going through. And if you didn't get the chance to buy the shares before the news, there's obviously more risk here for you in the case that the deal doesn't go through. But if it does, then you can expect another 10 to 30% jump in share prices, as Salesforce will need to pay a premium price if they want to buy all outstanding shares of Slack. And if the deal doesn't go through, the shares are going to fall, at least in the short term, as mentioned before. And if that is the case, then I think it will be a great buying opportunity for people who missed out on this company. But as always, make sure to do your own research so that you know what you're investing in and you can be comfortable with your investment. And that's going to do it for this video. Don't forget to hit the subscribe button with the bell notification icon turned on, and I will see you guys in the next one.